Okay. In the process of solving those problems, those people who volunteered become millionaires, billionaires, or at least millionaires. So this is my point. This is where I'm going. The reason why I have taken the stand I expressed earlier is because I believe that the way to pull Africa out of the dark ages is not to keep on improving the capacity of governments per se. It's to actually improve the capacity of entrepreneurs.
Appreciate it. So welcome to Crowd Talk. This is a podcast where we are looking to educate, to empower, and to ultimately experience with those who are here with us the power of crowdfunding. But we also do engage in discussions around startups. And I'm very pleased today. I've got my friend Idowu Akinde from Lagos State in Nigeria, who is the co-founder of Boolean Labs, managing partner of Boolean Capital. Welcome, Idowu. How are you?
Thank you very much, Barthel. Pleasure to be here. Happy to support. Thank you so much.
Yeah, absolutely. So just to get us going, ID, please just give us a little bit about your background and just take us through your journey of how you came to be at Boolean Labs.
Ooh. All right. So think of me as that person who used to be 100% left-brained, but has managed to somehow hack their own brain to the point where today I can cross from left to right brain at ease. I'll explain. I started my career in 2001 as a programmer, right? Someone, as a full-time programmer. I often joke that the languages we wrote programs in back then are today referred to as dinosaur languages, C#, Visual Basic, JavaScript, not the new JavaScript that they use. Olden days, we call it vanilla JavaScript. But between the 22 or so years that have passed, actually it's slightly before 2001, but I use that, that's okay. But in the 20-something years that have passed, I have evolved from a technical contributor to a technical contributor to a team, an individual technical contributor to a team, to someone who is responsible for the performance of the entire team, like a team lead, and then a team manager, and then a team manager who's responsible for the productivity of multiple disciplines within that team, right? Technical people and non-technical team people within the same team, and then something like a division manager, someone who's responsible for a P&L, and then a team coach, someone who manages or helps productivity for a lot of division managers, a lot of business managers that are managing technology teams. From the team coach role, I kind of progressed into the agile coach role, and which is, agile is essentially product development, modern product development. So I think that's where the universe of product development for me really exploded, to see how a lot of people do a lot of things. And that led me to where I am today. Well, not exactly. To the penultimate role, which is the startup coach, from the agile coach to the startup coach. And then from the startup coach, today I'm a startup investor. It's been a series of hops, but I always like to give credit to those people at the early stages who thought, looks like this guy, let's give him some more work. Looks like this guy, has some potential. I always like to give credit to those people. But in a nutshell,
but you're also happy to take the work on, right? So you also played a part.
So back in the day, a lot of the division of labor and differentiation that is rampant or that is commonplace today did not exist. So back in the day, there was no such thing as front end, back end. If you were building something, you were responsible for building everything, right? Including helping your clients with their infrastructure setup. So if you build some kind of software back in my day and it's
Mm.
working perfectly on your intranet and your company server and your own laptop, and you take it to the client side and you try to deploy or install, and something is wrong with their own environment, it's up to you to fix that, right? Unlike today,
Right.
where some gentleman or lady will say, "Hey, I've done my back end work. Let the front end guys deal with that." And I'm like, well, it's okay, but
Mm.
there are benefits to having the broad, perspective to it. So,
View.
yeah.
Okay. Okay. No, great for that. So, because of that work, part of your profile reads as saying you have assisted 1,000 startup founders and in product development. Can you just share a little bit about what that work entails for you?
So, I mean, to be honest, I I really, really think that what I just described, the diversity of experience that I just described, first of all,
Mm,
technical versus business, and then second, even within technical, I've been a tester, I've been a product manager, I've been a core hands-on developer, front end, back
mm,
end, middleware. I've done everything. Database, SQL, PLSQL back in the day, TSQL. You know,
mm.
uh, I think that perhaps is what I can draw on unconsciously today, right? Because sometimes when you're listening to a startup founder talk about their challenges, sometimes it's tech, sometimes it's product, sometimes it's business, sometimes it's marketing, sometimes it's pitching, right? Sales,
Yeah.
it's all sorts of things. And who would have thought that this obscure gentleman from an unknown town in Africa, would have had the some kind of
Mm.
useful experiences to share with startup founders on in 12 countries on 4 continents around the world.
Right.
For me, I find it incredibly humbling every time I have an opportunity to share insights with founders. But I think that it's that experience, that multiplicity, that diversity of experience that has
Mm.
equipped me to be able to offer useful insights and or perspectives to their challenges today. And majority of them have said, "Oh, it looks like that was useful to help me build my business."
Okay. But what if you were to come across a founder or somebody looking to fundraise and prepare themselves, and they were not necessarily core tech,
Mhm.
are you able to help those people? I mean, do the skills that you have allow you to still engage with them and walk them on that journey to where they want to get?
100%, and that happens every day, right? Just this morning in my office here, I did spend some time with a couple people who are not building a startup per se. They're building a small business, but at least some of the principles are universal. So, yes, I
Mm,
do have a focus, I do have a passion, I do have a niche for startups and startup founders. But
mm,
yes, from time to time, I do speak with people who are building other types of businesses than startups. So, yes.
mm. Okay, and then just for the audience out there, I'll just take us back and just give some context. A startup, and you can correct me if I'm wrong. A startup is usually a tech-based business that has the ability to become very very large and become a unicorn, and that is a business that could easily, if things go well for that entity, be worth $1 billion or more. Now, that is the distinction that we give and identify different types of enterprises. So that's what we call a startup. And then a small business or an SME is a company that can potentially have great growth in its own area, but may not necessarily be worth $1 billion or more. I just wanted to get that distinction out there. So let's talk a little bit about product development. If you just unpack product development, can you just lay it out for us? What is that?
Okay, so I guess at the end of the day, really, product development, highest level definition would be the way or the methods, processes, techniques, tools that people employ to build the products that other people, come to use and love. So
Right.
right now we're on airmeet, right? Right now we're on airmeet.com/something, something, something, right? Someone
Yeah.
or a group of people built this product. This is a product that we are using, right? For
Right.
this webinar or this session.
Right.
So the there are a variety of methods, processes, tools, techniques, that the team or teams that built
Mm.
this particular product might have employed. They might have employed waterfall, they might have employed agile. Even within the agile umbrella, they might have employed Scrum, Kanban, extreme programming, dynamic systems development. Quite a any hybrid of a of from that family of frameworks.
Mm.
Um, so that's like a high level. If you
Right.
think about it in terms of a a more layman friendly timeline, think about it
Hmm.
in terms of, first of all, thinking about validating who your customer might be. Okay. And this is
Right.
more suited, so disclaimer, this is more suited to tech startups. Okay.
Right.
Because to set the context, because the data has shown that 90% of startups will fail, and
Right.
80% of them, out of those 90% that failed, will fail because they are building something that customers do not want.
Mm.
It sounds simple, but it is a weakness, a temptation that all smart people are susceptible to. So all smart
Right.
people have the weakness to build something that validates their own sense of smartness, their own
Right.
sense of value, rather
Mm.
than what a customer will value. Okay,
Mm.
this is an entire hours long conversation, but this that temptation, that weakness, that risk is what has
Mm.
led to doing is what has led to the encouragement, the exhortation, the push to do a couple of exercises or run a couple of experiments at the beginning, the very beginning, before you write one line of code,
Right.
toward reducing that risk of building something that people will not want later down the line. So there are a couple of exercises, there are a couple of techniques for using these things. It's called customer validation. So you validate that you have a viable customer. You then validate that this viable customer, you can find a viable problem in their life to solve. So
Mm.
the thinking is, in every customer's life, there is a plethora of problems. If you were to rank those problems according to severity of pain to the customer, you would find that some of them are what you call minor irritations. If you were to
Mm.
say, if you were to ask your customer directly or indirectly, hey, customer, how do you feel about this problem? How painful is this problem to you every time it occurs? Is it a 1 over 10 or a 10 over 10? For those that they tell
Right.
you are 1, 2, and 3, those are minor irritations. For those that they tell you are 7, 8, 9, and 10, those are fantastic startup opportunities, right? Because willingness to pay is directly proportional to pain severity.
Mm. Mm.
And
Mm.
so the
I'm
more,
with you 100%. Just to step in before you
yeah,
continue. It's like I was having a conversation with somebody a couple of months ago, and they said oftentimes build it and they will come is a solution in search of a problem, right?
thank you so much. Yes, sir. Yes,
You've
sir.
decided you know what the solution wants, but you
Mhm.
haven't assessed what the market wants. And I think it works in both the online, the tech world and the non-tech
Oh,
world,
yes, it
that if
does.
you don't
100%.
give customers what they want, you're not going to make sales. I just had to put that in there. Please continue.
Thank you so much. Thank you so much. Thank you so much. So yes, that's 100% valid. So that's the spirit of problem validation. So the first thing to do, there are a couple of just to add a little bit of context further. So Boolean Labs, the way we run is that we take an experimental approach to helping startups or to helping founders build their startups. Can you hear me? Your video appears to be frozen. Can you hear me? That might be my network. Can you hear me, Barthel? Okay. Can anyone else hear me? Could you please type in?
Okay, I can hear you now. I can hear you now.
All right.
Yeah.
So I wasn't sure. Yeah. So
yeah, I lost you. You were talking about Boolean Labs.
Awesome. So I was going to say that we have so at Boolean Labs, we help founders build their startups by adopting, first of all, a mindset and then executing a series of experiments. So we say, think about this startup you are building as a series of experiments. The very first of which is customer validation. There are some experiments or some exercises that you will run that will validate to you yourself that you have a viable customer. And then we move to problem validation. There is a series of exercises and experiments that will advise you to run that will validate to you that there are viable problems in this customer's life that are worth your time, right? Just like I explained, certain problems might be minor irritations, certain other problems will be good problems to solve. And then there's a third step called solution validation. So in the product development timeline, next to customer validation and problem validation is solution validation. So the thinking is this: you have validated some kind of problem with a customer segment, right? You then want to it's after this problem validation that you have the quote unquote authority, like you said earlier, that build it and they will come. It's after the validation of the problem that you have the authority to go and build something. But then it's still a bit too early to build something concrete, right? Something concrete, right? It's too early to build something concrete. So in these early stages, you build a skeleton, a lightweight, low-cost dummy lookalike of what that future product might look like. In software terms, this is the reason for the explosive growth of the platform called Figma, which is useful for helping people visualize what the final software, web app, mobile app, whatever, desktop, Google, wearable, whatever type of app is going to be eventually. A UX UI design, which people have used Figma and other design tools to build, is an excellent low-cost way to communicate with a group of users, hopefully a segment of your users, and say, dear customer, we validated XYZ, ABC, 1, 2, 3 as problems earlier. What do you think about a solution that looks like this? Now, you could have taken an alternative to have spent $10,000, $20,000 to build it out and then come get the feedback. But why do that if you can spend $100 or less to build a UX UI design and share that design with them and say, oh, and the customer will say, oh my God, Bathu, where have you been all my life? I want this solution and I want it right now. And then you say, oh, customer, I'm sorry. I didn't know that I was going to raise your expectations like this. This product is not going to be available for the next 6 months. And then the customer says, no way, you're not going anywhere. As long as I've seen this solution, this thing has cost me XYZ in dollars per annum, per year, Even though you say it's going to be ready in 6 months, I'm paying now to book my own slot. Now, imagine that kind of buy-in to something that is still in prototype or UX UI design stage, right? So that's the purpose of solution validation. You want to bring out the ecstasy, passion, the aha, the lighted eyes, the ecstasy in the eyes of the customers and say, finally, Batho, if you produce this thing today, I'm ready to pay XYZ, right? And that is
Yeah.
obvious. That's the holy grail of of product development. Now,
Okay.
this brings
I'm
go
gonna
ahead.
stretch you a little bit. So when you get those walk-in customers that are non-tech and you
Okay.
speak to them about customer validation,
Okay.
what practical experiments can they go through to
Okay.
to to do that?
Okay. Okay. So at the core, even though I use the word experiments and I streamline for tech startups, at the core,
Mm,
the experiments are actually testing the experience and the reaction of your customer, your prospective customer, to
mm,
a promise of a future experience. Let me explain.
right,
So, if you think about the Figma file or the Figma design that I just explained, a founder might share with prospective users to get their feedback. A Figma
right,
design is actually a promise of a future software experience or a future application, a future product experience.
right.
Ultimately, it's a promise that, oh, this is what it's going to look like. So
Mm,
if we take that spirit, that the real DNA of what we're testing is how will customers react to the promise of a future product experience, then we can apply this also to non-tech founders, to non-tech customers, and say, if it's a restaurant, for instance, before we open to the public, can we handpick friends and, well, maybe not friends and family, just handpick a handful of people, give them a pilot experience, and call it a food tasting experience at XYZ gourmet restaurant in Victoria Island or Randstad, Joburg or wherever that may be, right? So you get the point. The point is to create a promise in the minds of those customers and then use that promise, or to help them imagine what the final experience would be like, and then test for feedback, based on that expectation. So if we can do that, and we can apply this to tailoring, we can apply this to human resource consultancy, we can apply this to, like I just used, a restaurant, food industry,
yeah.
it really doesn't matter, right? It's the promise of a future user experience. So this brings us to a point. How do I say this? Rookie developers or programmers that are just starting out, right, in their careers,
Right.
think
Yeah.
that think that excellent products are products that are excellent in technical functionality. However, that's wrong.
Mm,
Excellent products are products that are excellent in the user experience for the end user. And I
mm,
just wanted to quickly add this because I spoke a lot about experience, user experience, in the last
right.
answer. So it takes a while, especially for those people whose backgrounds is tech, to
Right.
outgrow the tendency to think that building a technically functioning product is all that is needed to achieve high virality among users. You actually need an excellent user experience to be able to garner the kinds of numbers that most people want. Thank you.
Okay. And I think, I had a thought when you started talking about customer validation, and that thought, to just continue breaking it down, is that ultimately, when you start up a business, whether you're a startup or you're an SME, ultimately you're going in there with a core of assumptions, right? So that customer validation is actually testing your assumption. So I'll give you an example. If I'm a farmer here in Botswana and I
Mhm,
want to sell organic chicken,
mhm,
the tendency, if we parallel this to what you've
mhm,
just been saying about the rookie
mhm,
technical guy or girl
mhm,
who believes the functionality is all they need. The
mhm,
tendency would be for me as the farmer to
mhm,
go and learn all I need and all I can
mhm,
about growing this organic chicken and then making this wonderful chicken. But
mhm,
ultimately, if I do that without having gone to the market, without
mhm,
having tested the market, without
mhm,
understanding, well, what is it going to cost me to produce this chicken? Can I get
mhm,
it to the market? Does it
Mm,
have the taste qualities that the market is looking for?
mm,
I'm unable to deliver the user experience that you're talking to,
mm.
right?
Thank you.
So I'm just bringing what you said in the digital sphere to the analog sphere, but it's
Thank
exactly that. And I love you for sharing that. I love that. Thank
thank
you
you.
so much, my brother. So so let's twist it around a little bit.
Okay.
Um, can you share an example of a startup that you've worked with that
Mm.
faced significant challenges and how you've helped them navigate those obstacles to achieve success? I mean, you don't have to name names, but if you can just create that scenario for us.
Significant challenges. So let me see.
Or let's say they didn't have product market fit. How did you steer them to getting to a point where they had that product market fit and then they were able to take off?
Okay. Okay. So let me use the example of a lady that is, so I'll keep her anonymous, but she's built a renewable energy company in Nigeria. Okay. Which provides clean alternatives to the traditionally hazardous, both human hazardous and environmentally hazardous cooking methods, right? For people in rural Nigeria. So she's really championed this. I
Mm,
remember the first time I met her, and this was a couple years ago. Today, her business is valued at about $50 million. As at
mm,
then, I can't remember the valuation then, but it was a lot less. As at then, she was struggling with what I would say she she had the mindset that you described earlier of build the build the build the mousetrap, right? Or build a product
mm,
and they will come. Okay.
mm,
So she had poorly defined her customer segments, her customer archetypes, her, her personas.
mm,
By the time we were done, so of course, I remember that in the early stages of our meeting, she was slightly reluctant to go through this overhaul experience that I seem to be suggesting, right? So
mm,
there was a lot of, hey, we've done our business model canvas, we have our value proposition canvas. Don't worry about those. Let's just talk about something else.
we're
But
sorted.
yeah, yeah, people sometimes have those. People sometimes have
Mm,
those inhibitions, right? And it's okay, right? Sometimes people haven't really been guided right. So
mm,
we went through quite a number of exercises, and I think by the time we were, just a few hours in, I think she had to stop the call and call her team members and say, "Hey guys, going forward for the rest of this engagement, all of you have to be in this, right?" Because she could see
mm.
where it was going.
Right.
Specifically, we did a lot of work on customer validation, which is
Mm,
essentially, deep dive into segmentation, right? Deep dive into customer personas. We did a lot of work
mm,
in problem validation, which is essentially value proposition design. So again, uh, again, like I said earlier at the beginning, if you imbibe a deep enough understanding of the psychography of your customer, the psychological makeup of your customer, then you
mm,
can make judgment calls about which problems are worth solving, especially in terms of future willingness to pay when the solution to that problem has become a product that you want to deliver. So I remember we spent a lot of time on that and a lot of attention on that. And then finally, we did solution validation by building out a business model canvas. The business model canvas is, I think, one of the one of the most genius tools ever invented for helping
Yeah.
people helping people build businesses, whether they're startups or not, any type of business. I think it's a genius tool. It's a one-page layout with 9 building blocks. You don't have to do the
Mm,
traditional 300-page business plan. Do that
mm.
one, do it well, and
And then
it's a
people understand you.
100%, 100%.
Yeah.
It's a
Yeah.
great and fantastic tool. So
Mm,
by the time we were done with that, she could see. In fact, during that session, she could see the reason why I was insistent that we should pay so much attention to the earlier customer personas and empathy maps and the early things that we did in the customer validation phase, because we needed to make certain judgment calls about each of those customer segments that could
mm.
only have come from a deep and intimate understanding of who your customer, who your target customer is. I always like to
Right.
use the example of bottled water. If you permit me for just a moment, sorry for promoting
Yeah,
the brand.
please go ahead. Yeah.
I like to ask founders, slightly tongue in cheek, and say, if imagine that you were employed as the managing director of Seaway Bottled Water in Nigeria, okay? And
Mm,
Nigeria, it's popular, has 200 million people, And I
right.
asked you a question as a newly appointed managing director of Seaway Water in Nigeria. Who is your Seaway bottled table water? Who is your customer? I've heard a number
Right.
of people say 200 million Nigerians. I've heard a number of people say everybody in Nigeria. I've heard a number of people say 0 to 65. I've heard a number of people say 13 to 75. I've heard a number of people say all sorts of things. And sometimes this is one of the, I wouldn't say it's one of the most critical. Well, yes, it is, but I would say it's one of the most frequent trip ups that startup founders have or business people have.
Mm,
The mistake
mm.
of not sufficiently slicing your whatever is your market into
Right.
distinct identifiable segments. By the time,
Mm,
let me explain. If we just do the simple age wise segmentation and we say, among 200 million Nigerians, let's create 6 or 7 brackets 0 to 10,
mm.
10 to 20, 0 to 10 years old, 10 to 20 years old, 20 to 30 years old, and so on and so forth. From that simple classification, and I've not started thinking about Gen Z, Millennial, Gen X, I haven't started thinking about those kinds of things yet,
Or
factors.
you haven't even started about earning. What are
Thank
they
you.
earning?
Household
Where do they
income,
live?
blah blah
Mm,
blah. I haven't started with that. Let's just use the simple analogy. Okay, just the simple
mm.
one. Do you know that just by looking at the age 0 to 10, I can create a variant of this water bottle. This is 75 cl, right? 75 cl. I can create a 30 cl variant that has, instead of this blue boring label, has a label that has Benten PJ Masks for,
Mm.
and it's 30 cl for people in that age bracket. Guess what will
Right.
happen when you have that? Okay, bracket one. Then 10 to 10 years old to 20 years old, I create another label. Definitely you have some bright colors. Maybe that first one is orange or red because they're children, right? Bright colors
Yeah.
attract children. The next one might be Spider-Man and Flash, or something like that. The next one, 20 to 30, just find a way to speak to them. So just by age segmentation, we've seen a difference in product packaging. Okay, we've seen a difference
Mm.
in product labeling. We will probably see differences in product messaging. The tone of voice and the specific words that are used will probably be different.
Right.
But the liquid content in the water, in the bottle, remains the same. If
Right.
you take the first approach of trying to sell this standard product, bottle, generic product to 200 million Nigerians, you will create messaging that is ineffective at inspiring a sale or a purchase from any of them, because you are trying to appeal to 200 million people. But if you create a 30 cl bottle, a 45 cl bottle, a 50 cl bottle for different of those age brackets, and each of them is designed to attract that age bracket. But my brother, you will sell, I can guarantee that you sell 10x of what you will sell in the other one when you put the
Yeah,
numbers together.
I was actually lost. I was gonna say no, your customer is the supermarket, but you're talking about that. That's just the value chain, right? The
That's a
distribution
distribution
of the
channel.
soap.
That's a distribution channel. Yeah, yeah, yeah.
No, awesome stuff. So let's talk a little bit about the investing that you've done. What do you typically look for? What gets you to get into an investment decision and say, I want to invest here?
Okay, so quick disclaimer, quick clarification, full disclosure. We haven't invested as Boolean Capital yet. We're about to launch our first fund. Okay, quick disclosure.
Right.
However, um, in the just to prevent, as you know, general solicitation,
Yeah.
I won't be crossing any boundaries. I won't be saying anything about the fund. I'll just talk about
Right.
generic principles that I have helped startups become more investor attractive, investor friendly. Okay.
Right.
All right. I always say that the first thing to do when when thinking about investment or fundraising is to understand, well, kind of accept, actually is more of acceptance, is to accept that there is a significant difference between the psychology of a startup founder and the psychology of a startup investor.
Mm.
A founder is by nature a problem solver. Every founder was doing something with their lives, and they serendipitously or accidentally stumbled on a certain problem that just wouldn't leave them. Okay. And some have responded to the call by leaving their jobs, some have created side incomes, whatever that is, right? The point is, a startup founder is who they are because they could not sleep or they could not resist the urge to solve a problem. So, by
Right.
definition, a startup founder is a problem solver. The
Right.
problem with that mindset, that perspective, that worldview, is that problem solvers see everybody else in the world as problem solvers. So the average startup founder interacts with an investor like a fellow startup founder. And they start to create decks that are trying to overprove or overimpress. This is the kind of impact we are going to have. This is the kind of problem we are going to solve. This is the way we are going to solve it. We're going to oversolve it. We're going to over-engineer it. We're going to X, Y, Z. Actually, all those things matter not as much to the average investor. So there are a few outliers, right? But the average
Right.
investor actually is a money multiplier, not a problem solver. The average
Right.
investor built a fund by speaking to people, amassing some type of aggregate amount somewhere, and saying, I'm promising those people and saying, hey, okay, you have $1 million of savings in your of savings. Would you give me $100,000 of that? Be a limited partner in my fund, and I'll give you $1 million in 10 years. Right? That's the essential promise of it. So a startup, an investor is built or set up to multiply the fund. They are looking for deals that will show. Of course, people try to balance that by building impact focused or capital conscious or environmentally conscious, backing environmentally conscious startups. But at its core, the same degree to which a founder is a problem solver is the same degree to which an investor is a money multiplier. And so this is the first thing to understand. When an investor picks up a pitch deck, The startup founder needs to start to recalibrate their brain and how they communicate things on that pitch deck and move away from technicals and problem solving towards communicating the irresistibility of the opportunity that that deck represents. Every investor is looking for that deck or that opportunity that if they don't take action today, they would regret in 6 months or 12 months.
Right.
That is how to create a pitch deck. And now we can expand this and talk about how you should design your individual slides, which slides matter, which slides don't. But at the core of it, that is the anatomy of a successful deck. A successful deck signals to an investor that if I don't act on this opportunity and don't act fast enough, I will miss out. That is the core. So,
but I wanna step in right there, because I think that also creates a problem, right? When a startup founder creates that pitch deck and they understand that an investor wants to multiply their money, how then would you as a coach manage their expectations in reasonability, right?
okay.
And not overselling
Okay.
what this business will do and the impact it would have on an investor if they found that, in fact, they've oversold themselves. Maybe you can just speak into that.
Okay. Okay. Good question and good opportunity to quickly clarify that. Thank you for that. So I am definitely a build a business type of coach. I am not a build a startup to flip it or to sell it type of coach, right? So that's not
Right.
my style.
Okay.
So my style is my style is 100, not predominantly 100% exclusively completely build a business. So build the fundamentals of the business. But and so to answer your question, the risk of over appealing to the interest of the investor, right? Through perhaps embellishment or through, excessive hyperbole. I, as a coach, will try and help you understand that the fundamental entry level baseline requirement is that you have a business that has solid metrics. Okay, so all of that goes back to all the things that we've been talking about around, are you building something that people love? If they love it, it will show up in your depending on your stage, in your metrics around weekly active users, monthly active users, and so on and so forth, daily active users. It will show up in your monthly recurring revenue, annual recurring revenue. It will show up in your customer acquisition cost versus a lifetime value of each customer. Those things will show up because, and those are the things that are the fundamentals of your business. So if you have good numbers around that, the rest of the work around becoming investor ready or investor attractive is speaking the lingo. So again, don't forget that many founders are coming from a background where they don't have a lot of experience in the boardroom or in structured places where they speak the lingo of these investors. So they're just maybe former engineers who are excellent in Python and JavaScript and TypeScript. So you really need to help them communicate in the language that the investors can understand. But definitely there is the need to build businesses and then communicate the value and the attractiveness of the opportunity that business represents.
Okay. No, great stuff. We have a question from Koto here, and
Hey.
understanding that you are not in crowdfunding, I think it's sort of similar to what I've asked, but you can share your insights and I'll step in. He says, what factors would influence a successful crowdfunding pitch? So what factors would influence somebody to get to a funding event? Um,
Mm.
yeah.
I
What are you thinking? I have some thoughts, but I just want you to to step in there quickly.
if you don't mind, please let me pass. I am always
Okay.
quick. I'm always quick to say that, if it's not my
Mm,
area of expertise, if I don't have valuable
mm.
information to share, I will tell you that
Okay.
immediately. So
All right.
crowdfunding not my
Okay.
forte.
Okay. No. I'll step in there. Thanks for that question, Koto. So, what you have to understand about crowdfunding, Koto, is that it is a funding event. You are looking for money. It's a source of alternative financing. What does that mean? It means that when you are looking at your organization and you're saying, I need capital, there is some sort of decision process that you're making. That decision process could be, I'm looking for shareholders because you've assessed that maybe the burden of debt is too much. Or you could say, well, if we go take debt, this business can sustain debt. So there are those kind of thought processes that you're going to go through. Now, crowdfunding is one way in which you could fund your organization. So fundamentally, ultimately, the discussion that we've been having around making sure that whatever service or product that you have is relevant to the market is going to be very important. Whatever service or product that you have, does the market take that experience well? Are they enjoying that experience? If I go and I buy organic chicken from a retail store, I'm expecting a certain level of freshness of that chicken. I'm expecting a certain size, and I'm expecting a certain quality, even when. And I'll use chicken because I have a passion for chicken farming, right? So when you cook that chicken, does it immediately fall apart? Or does that chicken hold steady and allow you to cook it the way you want? And immediately falling apart by that chicken is a function of how that chicken was raised. That's one example. So these are the fundamentals. Am I giving the customer what they want? So you would prepare those from the commercial perspective. So you would understand your business model well. You would understand your customer segmentation well. You'd understand your market well. If you're presenting XYZ and you're saying, we want to produce or we want to do KYC, we're going to create a KYC product in Botswana. The first question somebody would say, well, how large is that market and who are your customers? You need to be able to answer those things. But there's an added layer of crowdfunding that people often don't understand. You need to work and build up your business as well. So, what does that mean? In preparation to launching a crowdfunding campaign, you need to be able to be engaging with your potential customers, your network of people, and getting them excited about what it is that you're building, such that when you launch your campaign, they give you that momentum that allow other people that don't know you as well to come and fund into your campaign. So you've got to reach what we call in the business world, you've got to reach your first degree network. Who are the people who are going to support you regardless? So, Koto, if you're doing XYZ, as Batumutubudi, am I that person that no matter what, do I believe in your product or don't I? Am I going to support you? Am I going to put my 100 pula into saying, you know what, I'm supporting Koto? So, you need to engage people like that are around you, because these are the same people where other people who don't know you as well see what is happening. They too then become interested, and then they would want to invest in your crowdfunding campaign. So in short, that is what I have to say. I don't know if that answers you. I can bring you on stage, and if you're from a PC, you'll be able to speak. But if you're not, you won't be able to speak, or it says you're on mobile, so you're unable to join us. But you can certainly put a note below. We've got about a minute left. My friend ID has another meeting that he has to rush to, so we can't keep him too long. But I hope that answers you. I hope that answers you. Okay. ID, one last thing. What's your parting shot when it comes to, I liked it when you said you, and maybe I'm paraphrasing you wrong. You don't build founders for a funding or a flipping event. You build them to build a business. Can you just what parting words do you have to people who are interested in building their business fundamentals?
Well, thank you very much for giving me an opportunity to share share the following insights. And since we are aligned, at least from the African perspective, let me share
Right.
this. I believe that the much awaited transformation of African societies. Oh, perfect example. The Wakanda dream as sold by Marvel, right? The dream of Wakanda, the much
Yeah.
awaited, transformation of African societies
Mm.
is not going to come from the places that our parents' generation and the generations before them expected it to come from, aka the public sector and the governments.
Right.
Uh, so, so there was a lot of, probably a little too much of, dependence on the governments, African governments generally speaking, to implement systems, societal systems, right? Healthcare, education. Yes, I do understand the role that governments will play. But what we are seeing nowadays, what we've seen for the last 7, maybe slightly longer years, is that individuals all over the continent, right, have started to stand up and volunteer. So somebody stands up in Nigeria and says, I volunteer to fix payments in Nigeria. Another person stands up in Cairo and says, I volunteer to fix healthcare in Cairo. Another person volunteers in South Africa and says, I volunteer to fix logistics in Cape Town or Joburg, right? Somebody else volunteers in Gaborone. We started to see that this generation and the generations coming, hopefully, are not going to be waiting for the traditional model for societal systems. What I think will happen is that two things. Those governments and the government officials are going to notice that, these guys, this look at Paystack, Flutterwave. Okay, look at all the unicorns on the continent. Nine of them right now. Whether
Right.
any government likes it or not, they are doing two things. They are employing people and they are paying taxes. So you can't ignore them. Okay. In the process of solving those problems, those people who volunteered become millionaires, billionaires, or at least millionaires. So this
Right.
is my point. This is where I'm going. The reason why I have taken the stand I expressed earlier is because I believe that the way to pull Africa out of the dark ages is not to keep on improving the capacity of governments per se. It's to
Right.
actually improve the capacity of entrepreneurs who
Right.
are today building small businesses that look like small businesses today, but I am betting, hopefully with my time and my other resources, that in
Uh,
20 years' time, these companies will be industry captains. So that,
yeah.
in a nutshell, explains the earlier sentence that I
Awesome.
made. I hope
Awesome.
that's a good parting shot.
No, that is a wonderful parting shot. Thank you so much, Idowu. I mean, I want to talk to you in a couple of months. I know that whatever you're going through is holding on to you. So when you've started easing up, I want to talk to you, find out where you are, because
Sure,
I
sure,
know that's going to be an interesting conversation.
sure. I'm
Thank
looking
you so
forward to
much.
that.
And
Thank you
thank you
very
for
much.
everyone.
Thank you.
Cheers. Bye.
Pleasure.